So my payment would be lower by at least like $240 or $50.
Even
per
with a
month.
higher interest rate?
Yes. So I won't have to pay the PMI, obviously, because so I closed on it last year and it has appreciated nearly 20%. So now I'm at that 80% LTV. So I was thinking I can just refinance out and make it into a conventional loan and
Yeah.
get rid of the PMI. So
I would refinance. And one of the reasons why is because if now you're going to be paying the PMI for the entirety of the loan, because it is an FHA loan. So yeah, at the end of the day, the higher interest rate, like just because it's a higher interest rate doesn't mean you number one, you should like say, no, I'm not going to get a higher interest rate, because the numbers is what's going to tell you the whole story, like all of the numbers, right? So at this point, I think that you can either look at a cash out refi if you have that equity in there, or just get a regular refinance and get out of that FHA loan. Even if your payments are still going to be lower, the interest rate doesn't matter as much.
Okay. How does it work in the conventional space? Because I know as soon as you reach the 20%, it gets removed. So do you have to get an appraisal done by the bank, or how does it work?
So it doesn't just, once it reaches 20%, it goes away. It's not, you have to let the bank know that it has reached 20%, right?
But how would I know that?
So when you go to the bank to ask them about it, they're going to ask for either that you pay for an appraisal, or that you get a it's called a BPO, an opinion from a broker. So you have to, so the bank will take care of that stuff, and that's how you will know officially. But if not, I would just ask the realtor that helped you with that home, so that you can actually be able to see what the 20% is with the comps.
Okay.
Yeah.
Okay.
Yeah. That's a good question though.